Hi, I'm Steven Spencer, a partner at SMB Capital, a proprietary trading firm in New York City, where we trade stocks, futures, and options. One of the more difficult things for traders to do is, quote, pay up for a stock after a large gap following a positive catalyst. In today's video, we're going to explain to you why sometimes it makes sense to pay up and how to do it responsibly. Traders are trained not to, quote, chase. If you chase, you'll get burned. But the reality is that each trading scenario has to be evaluated on its own merits. We need to look at the catalyst. We need to understand how the catalyst will be viewed by other market participants. And then we need to identify likely action areas for market participants. If you do all of the above, you are in a position to pounce on the best risk-to-reward trades. Sometimes I'll look at a stock that has news and not have a strong view on how others will view that news. In fact, that is the majority of the time. And often these stocks will be tossed out and not added to my morning game plan. But a stock that has both sufficient liquidity and sufficient volatility, plus a clear catalyst, will always make my top trading names for the day. Such a stock was Target, TGT. TGT is a huge retailer. Retail is a very tough sector. We see headlines all the time for large retailers that are struggling. And so we need to pay very close attention when we see news that a large retailer is crushing it. So here's our game plan notes from this morning, showing that there was 25% year-over-year growth and Target had a lot of momentum. So now we're going to take a look at a 2-minute clip from our AM meeting where I discussed Target, and I will very quickly walk you through potential trading scenarios. After the clip is played, we'll then have a more detailed discussion of how Target traded after the open and how you could have executed on this opportunity.
Target is the opposite of the first two we saw. The numbers were ridiculously good. The first thing I thought when I saw how much it was up was I started to look to see how much was it up last quarter, how much is it up this quarter, seeing maybe we'll get one of those things are really good, but it's extended, seldom used situations. But then I actually started to look at the numbers, and it's just, they were phenomenal. Also, what I did was I compared it to, we go back a couple of years, and we look at the moves that it made off the lows when retail was getting killed back in 2017. It bounced from the mid-50s to $80. So on a percentage basis, that bounce is even bigger than what we're seeing in the last year, from like 90 to 105, and now this 105 to 122. So, yeah, thank you. And this is kind of where you want to see with the SPYs fail. There's 3 survivors: Walmart, Target, and Kohl's in the retail world. One other thing I wanted to point out to you was the high in 2018 was 90. So if you just take it on over the last 14 months, this percentage move from the prior high to here is actually not that unreasonable. 90 to 122 is 36%. Having said all that, you could definitely get a flush. What do I have for support on this? If you get a flush to, where it flushed already into this area here, and then eventually work its way up to here. So it's $2 ATR, $4 range. Let's say they just flush it to here on the open. Then it bounces 2 ATRs, that takes you to here. And it ends up being really strong, goes up another half of an ATR. That's kind of the starting point. It's kind of starting to do that already. Ideally, we'd get a flush back down into this area again. The buyer's stepping up. And if it gets above here, like I had in the open, it's a pretty decent chance it'll spike here. Then we'll have to kind of save on something like that and a pullback into the pre-market uptrend.
Okay, so you just watched a short clip from the morning meeting where I discussed possible trading scenarios for TGT. And what we do every single morning is we run through about 4 to 8 names where I go through those scenarios. The stock selection process that we've developed over the years is part of the 2-hour free workshop. If you're interested in finding out how to identify the best risk-reward plays each day, click on the link above, sign up for the 2-hour free workshop. In addition to learning how to properly choose the best risk-reward stocks, you'll learn 3 of the top trading setups that we use on our prop desk in New York City. So before we get and drill down into some charts on the lower time frame, what I wanted to do is show you what a weekly chart on target looks like. And if you notice in the morning meeting, you've seen several of these clips now, I'll start in the higher time frame and I'll drill down to the lower time frame. And understand when I'm doing this morning meeting before the market opens, I have some information on the catalyst, I have some information on where volume is trading in the pre-market, but it's imperfect information. And so the great thing about doing a trade review after the market closes is we can kind of see how things played out, and as we gathered more information during the day, what were the opportunities that presented themselves, not just the setups that I talked about potentially for the market open. So the first chart we're looking at here is a weekly time frame. I want to understand, the largest market participants are generally trading on a higher time frame than intraday and swing traders. And so I want to have an understanding of what target will do over days and weeks and months based on when it has strong catalysts and how it will move up and down. So the weekly chart we're looking at here covers probably the last 2 to 3 years. I've highlighted 3 points for you, 1, 2, and 3. The first point was, I think from a couple of years ago, when the stock actually broke out above $60 a share. That was point 1. And then you can see over the coming months that it moved up to 90. And that was the top in, number 2 was the top, was 90 and was the top in 2018, about 14 months ago. And you can see it came back down to 60, retested the breakout area before moving up to 90 and then breaking out to 0.3. So what you can see is where it broke out from 90 was last quarter they reported really good numbers and had a big up move and went up to about 105 and consolidated. So a couple of things stick out to me here. Number 1, it went from 60 to 90, which was a 50% move, did a retest of 60, then worked its way up to 90 again. Stocks consolidate through price and time. In the case here, we had a breakout last quarter in August through that $90, but it had a year to digest kind of that move from 90 to 60 and back to 90. So I felt pretty good, even though it had moved significantly above $90, that breakout only happened after a year of consolidation. My other thought process was, going back to the morning game plan notes, I highlighted a couple of things. Number 1, there was 25% year-over-year growth, and that there was 5 same-store sale growth, which means basically that each of their stores was doing 5% better from the prior year in terms of revenue. And so those things together gave me a bullish bias. And you've heard me talk about before, when I have a strong bias, I'm just assigning probabilities. I'm not thinking, okay, this is gapping up, it's going to hold the gap, and it's going to go up another $5 or $10. What I'm thinking is, there are other large market participants. They're looking at the fact that it had 25% year-over-year growth, which is extremely unusual. If we look at the other strong retailers, I mentioned, I think, Walmart and Kohl's in the meeting, in the clip you saw, and they're growing, but they're not growing 25% year-over-year. Maybe they're growing 10%, in the 10% range, plus or minus a few percent. So it's already growing more than twice as fast as its largest competitors, and that, to me, is a good chance that the buyers are going to step up despite this large gap, and if it then takes out its pre-market high, perhaps we can have another ATR up move in the afternoon or something like that. So that's my mindset. So now I want to drill down. I have a few charts here where we can drill down into the price action from right on the open. We'll look at the pre-market and the open, and then we'll go from there. So the next chart here, we are looking at a 5-minute. It just shows you the pre-market action. It shows you the levels I highlighted in the morning meeting. And so for myself, when something has a really positive catalyst like this, and then I see what the pre-market high is, and I see where it pulled back to in the pre-market as well, what I look for is some sort of flush into that pre-market support area where I want to initiate a position. And I understand that right on the open, things are very volatile in the first 15 minutes, and it may flush through that area. And so to be really aggressive and have a lot of size, I want to see some sort of reversal bar. And you can see on this 5-minute, it did reverse and go up. But let's drill down onto a 1-minute chart and really kind of get an idea of how you can attack this as a trader. And I'll give you several scenarios depending on how conservative or how aggressive you want to be as a trader. So a couple of things I'm looking at. And this is a 1-minute chart for right on the open, kind of highlighting the first 15 or 20 minutes. So right on the open, you can see it immediately sells off from 122 back into kind of the area that I highlighted from the pre-market where we'd be looking to buy on a quick profit-taking pullback on the open. Look at that first area I've circled on the volume. It's doing a lot of volume. That's about, it's probably over 1 million shares right in the first few minutes. And so that's you know, 150, $200 million of stock has changed hands. And you'd say, wow, that's a lot of selling. Maybe I should become bearish on that. The way I look at it is the stock's up $9 or $10 and several $100 million coming to sell. And the fact that it hasn't actually collapsed and gone halfway to filling the gap or coming close to filling the gap, to me, that's actually quite bullish. So there's a lot of volume going there into that down move, but it's not collapsing. It's come off 1 ATR and it's gapping up at that point, I think 3 ATRs. And I'm actually buying into that area. I'm sorry, I'm buying into between 119 and 118 in those 2 blue bars that I've circled for you. And then what I'm looking for is a change in direction. And so the next spot where if you're not being as aggressive buying into that area, you're looking for that first green bar when it recaptures 119. That's the kind of the first spot where somebody who is a momentum trader, they're looking for it to come to support and then start to turn back up where they might pay above 119. Even a little bit less aggressive trader looking for a little bit more confirmation might even wait till it gets above 120. So there's 3 options there. You've highlighted the support area. You can start to buy into the support area. Number 2, you can wait for the first green bar where it starts to turn. You can actually wait for 2 green bars where it's gotten back above that highlighted support area and say, okay, now I'm long against that support area that's been established. And that's where you're going to buy. Well, what I don't like to see, and I see this all the time, is the person who now then it's walked up, it's gone up 5, 6 bars in a row, it's come into the high from the open, and it ticks above there, and you chase there. And the reason I don't like that is it's basically now gone up $3.50, which is more of an ATR in about 5 minutes, and quite often people will buy there and immediately will tick lower, and you can see those 2, I've circled that area for you there, they'll pay above the opening high. You get 2 red bars because as soon as it doesn't go up right away, people who are paying up there, they're hitting the bids. It disrupts the buy program, which was very clear. You can see it very methodical, moving up to that second to top blue line. And then they hit out there. And then when it gets back above 122.5, a lot of times they won't buy and they miss the entire trade. That's actually an example of what I would consider, you know, intraday chasing. Now, some traders, some of the top traders will get away with it because they'll buy above that morning opening high, and when it doesn't immediately go higher there, boom, they're out. But most traders won't react quickly enough. They'll end up hitting it down below 121.5, they'll lose $1, and then they'll be gun shy the rest of the day. Let's take a look at the next chart I have. Okay, so the next chart I had was, I thought that if you didn't buy it into our support area, so we're looking at a 5-minute now, and I've zoomed out kind of from the open until 2 o'clock. I thought if you didn't buy it into that support area, which you can still see highlighted on the chart, and you didn't buy when it turned like right on the open, that there really wasn't a good place to buy it until basically, until kind of the middle of the day after it had topped out at 126. So basically it topped out at 126 and went up about $2 from the top blue line that we had highlighted. I think that was kind of, I'd highlighted 124, 125 in the morning meeting saying if it's strong, maybe it'll have an ATR move above pre-market resistance, and that kind of was that area. In that case, once you've seen that huge strength on the open, after it has a late morning pullback, what you want to see it is kind of stabilize and start to move sideways. And as long as it's, you know, kind of above that blue line or even in that area, and it's moving sideways and buyers have stepped up to much higher prices, and in this case it's over $5 above the morning low, that's what you're looking for. And I circled it right in the middle of the chart for you there. Basically, the tighter you get on the consolidation, the more confidence you can have that buyers are in control. And you can also define your risk. So it's 2 things. Number 1, buyers are in control. They've stepped up to that 124, above 124. You can buy there with risk. A lot of times I'll get these questions in the comments. And by the way, feel free to ask questions in the comments about this setup, this particular gap up on positive catalyst. If you have whatever questions you have, put them in there. And then also if you traded this stock or you trade the setup, please put your comments in there. We all learn from each other. So you have this very tight consolidation. I'm looking for at least 20 minutes plus. In this case, I think it was probably about 40 minutes. And once you see it kind of the buyers stepping up there, 124.10, 124.15, the second time it comes back, bid there. Third time, bid there a little bit more. Have your stops below 123.80. And that's a good spot to accumulate. In fact, some of the best traders who trade with the most size, once they see something's really strong or really weak, they'll wait for one of these really tight consolidations and put on a lot of size, especially something in Target where you can pretty much put on unlimited size and not have to risk more than 20 cents or so because it's very liquid, especially after the open when things slow down. So the next thing I want to highlight to you is after that consolidation and it starts to break to the upside, many people will use that as a signal to get in. That's fine, but understand when that happened, it went up and then it came right back down into the consolidation area. You can see that before and tested 124 before it eventually trended up later in the day. So you're going to have to be prepared. If you're the person, well, I guess the point I want to make here is I want to buy with the large buyers. And so that's why I'm buying at 124.10, 124.05, 124.15, because as it starts to move out of that consolidation and up, you're getting a lot of smaller players kind of chasing into that, momentum trading into that. And you can see the large buyer didn't step up there. In fact, it just came right back down to where they had been buying for the prior half hour. Eventually, it traded up another ATR from 124. I think it closed at 127. So here's our next chart. And so you can see I've highlighted, actually, this is the point that I just made to you is actually highlighted on this chart a little bit better. So they're buying there right above 124. I draw a sloping blue line where the sellers are stepping down a little bit, and then when that breaks, people will buy out of that. And again, that's a perfectly legitimate spot to buy, but at the same time, what you don't want to be is the person who buys on that break of the sloping blue line and then hit it out right when it trades back to 124. Again, I see this with developing traders all the time. Think about what we're trying to accomplish here. We're trying to be on the side of the larger institutions, and we want to be, when stocks are weak, we want to be selling where they're selling and shorting where they're selling, and hopefully ride the momentum down and press when we're in a position of strength. So in this case, when we have something with a strong catalyst that showed a strong opening drive, that's being bought, a couple of ATRs above the opening low, consolidating, the buyers have stepped up, we want to buy with the buyers. And then when it starts to move higher, if we want to add to the position, that's fine, but we don't want to be the person trading the break, hitting out on the quick pullback, and not capturing, as you can see in this chart, the full ATR move that happened after 2 p.m. And I think if you think about it a little bit smarter about your entries and being patient, I think you're going to have a higher success rate in a stock like this. And there was no reason, if this was one of your top stocks, to have not been able to successfully trade it based on the price action we saw. It was a little bit tricky if you didn't get it right on the open, but if you were patient over the next couple hours, it presented a couple of nice entries. So to recap our points, every day we're going to find stocks with strong catalysts. Our methodology for identifying those stocks is you can find at tradingworkshop.com. Once we've identified the best catalysts, we're going to cull our list down to a few names of in-play names, and we're going to be ready to focus on those on the open and understand, regardless if they're gapping up 10 or 20% or gapping down 10 or 20%, as long as you have a plan going in for that first 15 or 20 minutes, you're going to be able to make high reward, low risk trades, and then understand after the first 30 minutes when things slow down, we want to step back, see how the stock is behaving, look for the compression in those consolidation periods to enter into low risk position to capture a second or third leg later in the day. Hope you learned something. See you next time.